All right. Hello, everyone. My name is Marco Walker. I am extremely excited about today's webinar with Investing with Marco. Wonderful guest on this webinar that I had the pleasure of meeting at Inman Connect in New York. Very prominent in the real estate space. I am joined with Mr. Ryan Leahy from Moore selling seller financing and bridge loans. So excited about today's webinar to learn and really just get some financial tips, right, as it pertains to financing and investor financing. In these webinars, we received a lot of questions around financing and how can you as an investor ultimately grow and scale your investment portfolio. So excited to have Ryan on so that he'll be able to really give us some tips, some tricks, some insights into more of the financial side of the real estate investing side of the business and kind of go from there. So I want to turn it over to Ryan just to kind of introduce himself and yeah, just give us a quick intro. Ryan?
Yeah, you bet, Marco. Thanks for having me. Really enjoyed being here. It's nice to meet you in New York. So, yes, my name's Ryan Leahy. I am the founder of Moore Seller Financing and Bridge Loans. We are the very first to market solution that helps listing agents and investors attract more buyers to their listings by offering a far below market interest rate using a seller financing bridge loan for highly qualified buyers. At the end of the day, that's a fancy way of saying we're helping sellers utilize their current really low market interest rates and have them be able to advertise those rates without having to pay off their current loan and utilize that not only to, a lot of people say, get it confused with assumable loans and those types of things. That's not at all what we're doing. We're showing sellers how to actually monetize and make money from their current low interest rate on some of the properties that they have and sell a higher than interest rate than they have, but it's far below the current market rate. So the reality of the situation, Marco, you mentioned, is that rates have the market stuck across the country. And so we built a solution for that. I have a 24-year finance background. I've been a mortgage lender for over 22 years. And this is what program that we rolled out across the country in December of 2023.
Wow. What I hear is 20 plus years of lending experience, real estate experience, etc. So we're excited to learn today from you and just really piggyback off of your experience and learn. So yeah, thank you so much for joining. So ultimately, what inspired you to create more seller financing program, and what gap in the market does it actually feel?
Yeah, you bet, Marco. I mean, diamonds are created and born under pressure, right? And so in December of 2022, I had a large mortgage team, a relatively large mortgage team here in Central Texas. We were closing over 1,500 loans a year. And after my third round of layoffs, it takes a piece of your soul. And every time you've got to do those. And I was like, there's got to be a solution. I was like, where, irrespective of the Fed and what interest rates are doing, there has to be a solution. How are these low interest rates? How can we help break the interest rate barrier? And then I was like, wait a minute, we just refinanced and did 9,000 closings just over 4 years. All of those people and all the people we've helped them previously have all rates below 4%. Matter of fact, 87% of Americans that have a mortgage have an interest rate below 4%. And 66% of Americans in major metropolitan areas, so, major city, they have an interest rate below 3.5%. And then 40% of all the homes are paid off. So the concept was then like, well, what happens if we just ignore the Fed and we empower the sellers on how to bridge the gap and really truly do seller financing the right way? I've taken lots of classes from all the gurus of seller financing, and there's still a major gap that I felt was in a lot of the systems and processes that are currently being offered to wholesalers and investors and even the traditional market. And I just asked my question one question. If it could be done the best way, and in my opinion, the right way, how would I do it? And so I went out and created that turnkey solution called More Seller Financing and Bridge Loans. Mm-hmm.
Wow. Wow. Great story. Truly appreciate you sharing and definitely want to get into some of those examples and just really understand a little bit more about what More does and how More can really help the audience and investors in general. But before we go into more about your company and More, obviously 20 plus years of experience. And you talked a lot about interest rates. Right now, uh, man, I get so many inquiries, so many questions around just what do you feel like the market's going to do? Do you feel like the market will change and interest rates will go down? People will get back to buying properties at record numbers, et cetera. Get all of those types of questions consistently. So with rising interest rates and affordability being truly a challenge in the US, what are some different financing solutions and benefits that you would recommend or that you can educate us on? And then options for, to really help investors and make buying investment properties more affordable.
You bet. I mean, you have the chicken or the egg. And what I mean by that, look, when interest rates come down, what happens to home prices, Marco? They go up, right?
Mhm.
So when we start talking about the chicken and the egg and building portfolios, which I've helped my clients do for more than 20 years, it's you always buy when others are not buying. And you're going to have some short-term pain generally when you do that under the traditional model. Well, what's the short-term pain? Right now, it's much higher interest rates. DSCR interest rates are pushing 8.5 to 9%, depending on credit scores. They require 20 or 25% down. Traditional mortgages are running in the high sevens for 20% down and mid to high sevens for 25% down. And you really can't, it's very difficult to cash flow properties. Then you start unpacking this. So that's problem number one. Well, okay, well, I'll buy it at a discount because the sellers have already cut the price one or two or three times. So I'm getting a discount, but now I buy with a higher interest rate. Well, now I have the refinance costs, and then I have the pain in the nose or the factor of going through those refinance costs and challenges that I've got to go through in a year or 2 years or whenever rates do come down.
Mhm.
So what would it look like if you could actually get a far below market interest rate today and you're able to capitalize on cherry properties that sellers have already cut the price one, two, maybe even three times? And if you could get a far below market interest rate, I mean, even below private wealth money, that property could cash flow and you actually could have your cake and eat it too. Well, that's the program of More. And so we actually created a buyer side of More and a seller side of More. Where does more come from? Everybody wants more, right? Nobody ever complains when they get more for the same price or less. They just don't. So,
Absolutely.
unless it's trash, I guess. But if you're talking about if you're a seller, how about getting a higher sales price?
Mhm.
Or because you're not being asked to cut the sales price again after you've cut it two or three times. For a buyer, whether you're a primary residence buyer or you're an investor buyer, how about being able to buy more home for less money?
Yep.
How about being able to cash flow our property right away? How about not having an impending, taking a higher interest rate up front and then having to do a refinance with those costs? How would that look? So that's what we did with More. And Marco, I can share our screen. You just let me know. I can show you guys some of those listings on what you want to.
Yeah, you know what? I do want to because hey, I'm in the real estate space as well. I'm an investor, a broker in several states. But I'll be honest, me understanding bridge loans, there's a gap there for me.
Yeah.
So and I assume that if I have that gap, there's many people that it's on this webinar as well as that will watch this webinar that have that same gap. So if you
Yeah.
can, just really walk us through how does a bridge loan truly work and what are the pros and cons? Because of course we want to know what's the upside, but we also want to understand, what risk is truly involved in this process as well, and just understand from end to end what is a bridge loan and how does it work?
Yeah, I love that question because why did we start calling it a bridge loan? Well, because seller financing, we've been struggling a little bit with language if it's seller financing or is a seller bridge loan. And let's talk about the program on what this means. Seller financing generally has two extreme negative connotations to a seller or to a buyer. And when they think about this, two things come to mind. One, if you're a seller, if you're a buyer making an offer to a seller and you're saying, hey, because you're an investor and you want a lower interest rate, and you're saying, I want you, Mr. Seller, to do seller financing for us. Generally, if you're talking to some of the major gurus in the world, the way that they outlay it, a lot of their programs are a lot harder to sell or convince a seller to move forward with. So we decided that what would it look like if the buyer was first off highly qualified? Because if you're making a seller financing offer to a seller, there's two things that they don't want. One, they don't want to lend to somebody that can't qualify for a loan.
Mm-hmm.
Because why? Because generally that means that the buyer can't qualify for a loan, which means there's probably something behind there that they don't know, which means there's going to be more risk down the line or really headaches down the line.
Mm-hmm.
So one, all of our buyers are all fully pre-approved. So we have them come through, get pre-approved. That does a couple of things for the seller. One, it ensures them, gives them confidence that this is a qualified buyer. Number two, it also lets them know that they are not responsible for predatory lending because we are going to do the ability to repay calculations and protect that seller from any ability to repay or predatory lending. So there's two pieces behind being pre-approved. Number two, from a seller's perspective, most sellers, not all, but most sellers, when they hear seller financing, they think long-term financing. They have a current 30-year mortgage. They're like, oh my gosh, I don't even want my kids in the house for 18 years. I sure don't want to be attached to somebody I don't know for 10, 12, 15 years, 20 years. So that's where the bridge loan comes in. The programs that we do are short-term financing. Most people are of the camp that interest rates are going to fall somewhere in the, inside 5 years, inside 3 years. Who knows? None of us have a crystal ball. But if you accomplish those two pieces where a seller, A, understands this person's highly qualified and there's no predatory lending risk to them, and B, they understand that this is relatively short term, meaning 3 years or less, you've gotten over 90% of the negotiations in order to have a deal come together. So we help bring deals together based on terms. We have a highly qualified seller that generally does not have their back against the wall. We will help some sellers if they are in some dire straits type of things. But for the most part, almost all of our clients are sellers that are highly qualified. They're not in foreclosure, those types of situations. Our buyers are also highly qualified because they have to be pre-approved. Now, we can utilize the non-QM or even DSCR qualifications and have that buyer still get a really low interest rate. So when we work with sellers, we help them understand in order to attract a qualified buyer, you're going to have to offer a below market interest rate, which means offering an interest rate maybe at 4.99%. So as an investor, can you cash flow a property at 4.99% or even 5.5%? So those are the types of strategies that we work with, and we work with that seller to kind of help understand that realization. And then B, we help those buyers come in, qualify, or even use some of the larger qualification programs like a debt service coverage loan program or a non-QM program in order to qualify if they need to, other than a traditional program. So when we do that bridge loan, the bridge loan just means that it's a short-term loan, Marco, that works for both parties. And at the end of the term, us, the loan officers, we're trying to look for opportunities to refinance the home buyer or investor, whoever it may be, the home buyer, and we're looking to refinance them into a longer term mortgage. In the event that the interest rates haven't come down or the investor can't qualify for a mortgage, well, Marco, if you were the seller, you have three options. One, force a refinance or a sale.
Mm-hmm.
Two, do what's called a renew and extend.
Okay.
Maybe the seller, if the seller had a 3% interest rate and the home buyer Scott ended up buying the house at 5.5% interest rate, well, you, Marco, are going to make the spread between that 3% and that 5%. Okay. After you sold the home and the house has been deeded to the home buyer, you're getting paid every single month. You got the down payment, 20, 25, 30% down, whatever we arrive on is going to make the most sense for you, the home seller.
Okay.
Then you're going to make monthly income every single month. And that's really where the magic starts coming together. And you get to use that monthly income, Marco, for whatever you want. If you go use that to buy your next investment property, and your next investment property is at 7%, 7.25%. If you're utilizing the $500, $600 a month that you're making on the margin, that difference between the 3 and a 5.5% that Scott bought your home at, well, that makes your effective interest rate usually 2 to 2.5, sometimes 3 points lower. So you can use this program to grow your portfolio. Maybe you have a current property that's just not doing it for you anymore. You'd really like to free up some equity, and you'd like to, but it was maybe your primary residence, or you bought it as a second home, and you have a really far below market interest rate right now. Well, that interest rate is an incredible asset that most agents don't understand, and most investors don't understand how to monetize. The home is not the only asset in the transaction. So is that far below market interest rate. And that's what we bring together and show everybody how to make it.
This is it is very, I would say, eye-opening when you start to, sometimes people are overwhelmed by numbers and don't understand that the financial impact or the financial piece when it comes to truly investing. So appreciate you sharing. It sounds like from just me listening, right, that you're working with high quality sellers and buyers, and you're looking for sellers who have, sub 5% interest rates, and are interested in either are interested in selling their homes, etc. And then you can pair them with a very qualified buyer, and to bridge, if you will, and by both parties being qualified, when we look to refinance 3, 5 years, whatever that may be, you're dealing with two high quality parties that can still really consummate the transaction. So makes a lot of sense there. Just to get to a little bit more, I want to get into some examples that you do have. But before we do, when it comes to just due on sale clause, right? So if you can just share, kind of what to know about a due on sale clause, really what is it and what's overall the risk, and how do you ultimately mitigate that risk?
Yeah, no, thank you so much, Marco, for asking that. This has been something that it took us a long time to figure out. So the entire year of 2023, I had 16 full-time employees working on this with 3 separate law firms. And we actually took this all the way to Washington, D.C. and hired the RESPA attorney and the CFPB attorney, and got their opinion on this. And then we found 2 law firms that specialize in these types of transactions. And so what we did, our 2 law firms have closed more than 25,000 seller financing and bridge loan and wrap transactions over the last 26 years. And so what's fascinating about this is that when we built our entire program and process, not only is it, a lot of people could say, oh, the program's only been out since 2023. We actually found two law firms, again, that have been doing it longer than 26 years, with more than 25,000 combined between both law firms. One's national, because again, we can work in all 50 states.
Absolutely.
And the other one's here in Texas, where we're based out of. What we found is that not one time have they actually had the due on sale clause enforced. Is it triggered often? So what is the due on sale clause? Let me back up.
Right. Yeah.
In your deed of trust, almost every Fannie and Freddie deed of trust that's out there, there's a few words in there, and it says the lender may call the note due in the event you transfer title without permission from the specific lender. The word is may, it is not will. And so what we did is we built an entire proprietary process around how to handle this, all based on the almost 30 years of experience between our two law firms, where they've been able to never have one triggered never had one put in force. They've had them triggered hundreds of times and been able to handle that. Over the 25,000 plus transactions of both these law firms and title companies closed, because the law firms own the title companies. They have it's been less than 150 that they've ever had to handle and deal with, and never one of them has ever had an issue with actually having the due on sale clause enforced. In the event that a due on sale clause is going to be enforced, because there's always that first time, right?
Absolutely. Here's we want to know.
Yeah, exactly. So we built More has a due on sale clause assurance program. And our assurance program will come in, it will pay off the underlying lender, and then we do what's called a refinance for that buyer, and then we'll make up the difference between the payment of the buyer. So there's zero impact, there's zero negative impact to the buyer, and we do a no cost refinance transaction. And so we have a really refined process on how we provide that assurance. It's not insurance, because we're not an insurance company, but we have a process that will step in the event that all the remedies aren't successful, and then we would deploy that solution.
Perfect. I want you to bring this home for us, if you can. Share, maybe some examples that you've had in the past, as far as with More and the bridge loans that you guys offer. Do you have any examples as far as the program, as far as that you can really enlighten us on real life examples that you guys have had, so that we can really just kind of understand a little bit more in detail the program and the program benefits?
Yeah, absolutely. So first off, if anybody chooses to go to our website, it's More, More, sellerfinancing.com. And if you click on, there's a listing button. I'm going to go ahead and pull that up real quick. Let me share that screen here. Parker, let me know if you can see that.
Absolutely. We're live. I can see it.
Okay, excellent. So these are, if you're a buyer, investor, you want to expand your portfolio with your firm. And how would it look like if you could actually pick up properties with these interest rates? I mean, so you get pre-approved on a DSCR loan, and we're able to go in and negotiate here a 5.125% interest rate for you on a $450,000 condo. These are actually primary residence rates we were quoting. This buyer would say $465 per month. Let me scroll down to one, because here's one that I can that we just recently closed. This was a $450,000 condo as well, here in Austin, Texas. And this buyer in particular was requiring 20% down. So if the buyer put 90,000 down, this buyer would have been saving $525 a month from a primary residence interest rate at 7.25% at the time that this property closed. And so on an investment property, since our audience generally is investors, if this were 7.75, this is going to be closer to $600 a month monthly savings, giving this property a huge opportunity to cash flow. You can see the principal interest payment is significantly lower. It's below $2,000 a month here. So if we utilize, you can just go to our listing screen and see all the ones that are sold. Again, these are mostly in Austin, as we are just now starting to roll out across the country and onboard that. But what I can do is even show one of these calculators. And let me see here. That one in particular, this is kind of what it would look like from a seller side. Let me get that share screen down. Sorry about this. There we go.
I love it. This is good information.
Yeah, no, thank you. So really what we really always like to show, what is it from a seller's perspective? What are you looking for? You just want to get a higher sales price and sell it generally faster, right? So you want to get this program allows for better marketing, increased buyer traffic, maximizing the sales price, because if you're getting a below private wealth interest rate that the seller's offering, usually sales price, the seller's expectation is that they're not going to get beat up anymore on sales price. Most sellers have already come down to usually once or twice or reductions in their sales prices. Other huge benefit, though, is the interest income. Remember, we talked about that arbitrage income, Marco, and then a turnkey solution. So we are the first people that have come out and said, this is how a seller financing bridge loan works in the entire country. We're the first company that's come out. Then we handle all the education to the seller, all the education to the listing agent, all the co-marketing that goes in MLS, all of the education to the buyer, all the education to the buyer's agent, who services the loan. We have our own servicing company that we have. We have our own law firm and title companies to make sure it's all legal, compliant, enforceable, and has protections for both the buyer and seller from predatory lending, and to make sure that there's always an exit plan and an exit strategy in place, and reducing the risk for the transaction overall. So that's what we come in and do there. And then from a buyer's perspective, what do they want? They're getting far below market interest rates, particularly for investors, since that's generally our audience on this one call. They're getting rates really on almost 3 points below the market. There's significantly reduced closing costs. None of these are programmed. While it does have a 1 point of the sales price fee, it's generally far below the total cost that they would pay for a traditional loan. And then they can move up or upgrade opportunities. So the recap on that program, that home that I just showed you, in this case, that seller was leaving a little bit of money on the table. So what this looks like, if the seller were to sell traditionally, they would have walked away with about $65,000 after all closing costs, realtor fees, the whole 9 yards. With our program, taking the $90,000 down, paying all the agents, they walked away with a little bit less. So they actually only left $11,000, and that was a real life closed transaction. They only left $11,000 on the table, but they were actually making monthly arbitrage earnings of $21,000. Let me see here. Overview. That seller in particular had a 2.75% interest rate. This and let me see here. Hold on 1 minute. Cash flow. Here we go. That buyer ended up not having the best credit. So we were marketing the property at 4.99. We helped the seller adjust that interest rate up because the buyer did not have the best credit. But it was far below. The buyer ended up getting pre-approved at 7.75% with us. And then the seller had a 2.75% interest rate. So the seller, every month after they sold the home, that means the home is deeded to the buyer. If Scott's our buyer, Scott got deeded the home. After you sold the home, Marco, you're still making $594 a month. You got your down payment plus $594 a month. Then when the buyer refinances, in this case, it was 36 months, you as the seller are going to get the final equity that's in the property of $43,000. Now, if you remember, when I went through this, you only left about $11,000 of total equity on the table. But how come you're getting $43,000? Well, you currently still have that loan in place. Remember, at 2.75%. That's in the case Scott is the purchaser and he's paying down your mortgage. Well, guess what? Scott, You're the bank, Marco. We've taught you how to do our bridge loan. You did our bridge loan program. And that means Scott paid down and built additional equity by paying down your current mortgage to the tune over 3 years of $32,000 more. When you bring all of that together, this is what it looks like. And instead of you making, when you add the $21,000, 400, that's you making that monthly arbitrage of the $594 a month, I think it was, times 36, plus the $43,000, which is the 11 grand, 65 minus 54, that's $11,000 roughly, plus that 30, what was it, the 37, I think it was, that equals a total of 43, 32, 43, 80, 88, 60, sorry. Giving the seller, over just a 3-year period of time, you made 45% more profit on this home. 45% more profit by getting paid out over 3 years. And all you left on the table was 11 grand. So my question to you, Marco, if you were doing this presentation, would you trade, leave 11 grand in the deal in order to make $54,000?
Absolutely.
Yeah. And guess what? There's also a nice cherry on top. In the event that the buyer, in this case, Scott, stops making his payments, you get to foreclose. And our law firm is built into all of our entire transactions. They're paid for up front as part of the transaction closing costs. They will step in and handle that foreclosure and eviction process on your behalf. You don't ever have to get involved. Our mortgage servicing company handles all the payments, all the escrow. All of the buyers are required to escrow. So there's no tax and insurance risk. There's no risk that Scott makes the payment to you and you don't make the mortgage payment, because our mortgage servicing company is required to handle all the payments. And then they send you the arbitrage, in this case, that $594 a month. So yeah, you made 5 times your money by leaving 11 grand in.
So this is perfect. Perfect. And I see some questions starting to roll in, and we'll get to those. So please submit your questions that you have. We want to definitely allow Ryan to educate us. And that's what this platform is about, is how can we learn? How can we grow? How can we scale? So with that being said, you said your example was for the Austin, Texas area. So it's kind of a two-part question here. What markets, I know you said 50 states earlier, what markets are you guys now able to completely deploy your service in? And then also from that, how can real estate agents, how do you partner with real estate agents and brokers with these particular solutions to close deals faster through bridge loans and creative financing strategies? Because I think the question as an agent, what they would have, right, is as a buyer, like I'm the buyer, and to your point, utilizing the bridge loan, I'm paying down still the seller's mortgage versus me as the buyer paying down the principal on my mortgage. So those types of questions, I think agents would want to know so that they can answer for their clients. So if you can enlighten us on your locations that you service now, as well as how agents can truly leverage your solutions.
Yeah, thanks, Marco. Sure. So we are in all 50 states. Our law firm has closed, our national law firm has closed in all 50 states. And so we are deploying into those right now. Currently, we're prepared to service each market. Our major focuses are Texas, Florida, California, Colorado, and kind of all up the West Coast, but also we've got Maryland that's coming online, Nashville that's coming online next month. When I say coming online, the largest team in Nashville signed up with us last week, and then we're in the deployment process of onboarding all of their agents. Maryland will be coming on in a couple of weeks, where we'll be doing an entire education training for their agents. Now, here's what's amazing about what a lot of the agents love. They don't have to learn the program. All they need to know is enough to introduce us. And we just had to ask them to ask one question, which is, Mr. and Mrs. Seller, Would you give me another tool other than a price drop and open houses to market your home? And what it is, it's a form of seller financing, generally a bridge loan, which means that it's short term for highly qualified buyers. And we're just going to market it. Doesn't mean you have to offer it, but I want to see what kind of highly qualified buyers we can attract to the table. And I'd like for you to meet with the specialists that do this, that will walk you through what the program looks like. And it's a no cost, free marketing. And let's go ahead and put it out there, because there's over 123 markets in the country that are currently seeing rising days on market faster than we've seen in a long period of time. And they're staying on the market longer. So I want to see what we do know. Builders are selling homes. Why? Because they're offering far below market interest rates. They're using usually what's their profit, and they're buying down the interest rate significantly. So there are a tremendous amount of qualified buyers that are sitting on the fence, just waiting for interest rates to drop. You obviously engaging me, Mr. and Mrs. Seller, right now because you need to move this home. You've been transferred. You've got to sell this home. You're motivated to sell this home for whatever reason. So would you be open to meeting with the specialists on this? And the answer is yes. All we ask is for an email introduction. We have them go to our website. All they do is fill in the real estate agent's information. When our clients go to the website, moresellerfinancing.com, they click if they're a buyer, a seller, or a realtor. They enter the agent's information and upload their mortgage statement. That's pretty much it. We will then also ask them to schedule a time, and they pick a time, and the invite goes out to the agent. It's a Google Meet call, and we all hop on a recorded Google Meet. We do require the agent to be on that call so that we can review the entire steps with the agent and show them how it becomes part of their marketing plan. We issue compliant MLS marketing so that it can go into the MLS agent remarks. It can also be generally put in the pictures, one of the seller financing flyers. And that's what we do from the listing agent side. Perfect. So from the buyer's agents, how many of us have buyers that have told us they'll buy as soon as interest rates are below 5.5% or 6%? Yep. I mean, hundreds, right? I mean, yeah. So we say, excellent. Let's go ahead and get pre-approved. Let's get you pre-approved. Once they're pre-approved with one of the more preferred lenders, we will roll out the more buyers program with that preferred lender or through us. And we have the agent give us their MLS activity, the buyer's MLS activity, and then we will call that listing agent to see if the seller would be interested in doing a bridge loan at a far below market interest rate for a highly qualified buyer that's willing to put 20% down or more generally. So this is, who is it not for? Generally folks that A, don't qualify, or B, don't have down payment. So it is a little more difficult for first-time home buyers if the first-time home buyer can't put 20% down. Most sellers want a minimum of 20% down. Will sellers do it for less than 20% down? Yes. Have we had sellers do it for less than 20% down? Yes. Have we had sellers lend to somebody that doesn't qualify due to credit? They qualify from a debt to income perspective and meet all the ability to repay requirements. Yes. Sometimes we've had a divorcee that the credit got wrecked, but they have a great job. They have the down payment, and they just need they want a place to buy. A great program. This could be a great program for that. So that's how we're helping brokerages unlock the market. We're saying, forget the Fed. Let's just go find those motivated sellers. And let's find the sellers that have really low interest rates, because we can look up their property information on the existing mortgage that they currently have.
Makes a lot of sense. I love it. I love it. So please, if you're still on this webinar, see we still have a ton of people on here. Submit your questions. We're going to start answering some questions. So please go ahead and submit your questions. So while we're waiting on some questions to come through, some additional questions to come through, Ryan, how do you see this as far as seller financing, bridge loans, et cetera, really just shaping the real estate industry, and where do you really see this? Uh, how do you see it growing? While we're
Yeah.
waiting on some of those questions to come through.
No, absolutely. Thanks for asking. So, we see that this is, first off, if I'm an agent and you told me that I had another asset that I could make another 20, 25, 30% more profit potentially for the right situation, I'd most certainly want to know that my 3% mortgage is worth a lot of money. So this is a point of differentiation. Meaning, if you're an agent and you're also sitting at that kitchen table and you know that seller's talking to one or two other agents and you're the third one, how are you going to land that deal? I mean, at the end of the day, we kind of like lenders all buy their money from the same place. If you're an agent, you're going to all be putting it in the same MLS, more or less. Some people have the off market MLS, but at the end of the day, it's still an MLS, and you still can really only market it through certain open houses and traditional. So I'd use this as the agents that have been very successful at this use this as their point of differentiation, and they say, look, Mr. and Mrs. Seller, you don't have to do this, but this is like the afterburners where we'll be able to unlock a whole segment of the market that is sitting on the couch because their current mortgage lender is telling them they're only pre-approved for $550,000. And if we offered seller financing and they qualify, they can actually buy your $700,000 home for the same monthly payment. So as a buyer, do I want to buy a $700,000 home versus a $550,000 home for that same monthly payment? Heck yeah. That's a better school. That's better amenities, better neighborhoods, better pools, better everything for me and my family, usually. So as long as those buyers go through our very specific pre-approval process that's designed to help make sure the seller cannot be liable for predatory lending, then we can free up a lot of these buyers. And it doesn't matter if they've been pre-approved another lender. Our job is to make sure that we have all this in a centralized location. It's shared with the law office so that it's everywhere, that in case there was something that happened in a foreclosure, an eviction process, and the buyer tries to come back, we've already dotted all those I's, crossed those T's. It's already been through the law firm's process as well as our process. And our job is to protect everybody in that transaction.
Wow. Wow. This is awesome. This has been an awesome experience. Dave Preston had a question just around what time frame was that example, but I think you answered that as far as it was over 36 months. Is that right? That's the example that you did provide.
Yeah, so here's what's interesting about it. Remember, the interest rate and the term, meaning the length of the period of time the seller does the loan, is totally flexible based on both the buyer and the seller. We've done these bridge loans as short as 6 months and actually as long as 7 years.
Wow.
We had one guy that he was a Canadian foreign national, and he said, I'm not going to become a Canadian citizen, but I have a project in Texas. It's going to last somewhere around 5 years, and I want to make sure that I can have this property for 7 years, and then I'm going to sell it. And I'm not going to go refinance to a foreign national program at 9.5%. I'm just not going to do that. And the seller had the property on the market for 9 months. They'd done 3 price drops. They were actually thought they were going to walk away writing a check that the seller was upside down. We put our program together, and based on a 7-year bridge loan, we were able to get the interest rate up high enough. And the seller actually walked away with $7,000 in their pocket versus writing a $17,000 check, and made right under $700 a month. And so they were going to make right around $65,000 over a 7-year period of time instead of writing a check of almost $17,000 to close that transaction. So, we're unlocking properties all over the country and really helping find the right buyers, because they are out there. There's so much pent up demand just waiting on interest rates to fall. And if I'm a buyer, I'm buying when prices are low. And if I can secure a low interest rate through a creative program like this, where I'm protected as a buyer, meaning that I'm making my payment to a mortgage servicing company. So I'm insured that mortgage is being paid and the property taxes are being paid, and that the seller's not keeping it. That would make a lot of sense to me. If I'm a seller and I'm motivated to sell, and somebody came and showed me this program where I can actually make more money over time and even recoup my price reductions, because I've already cut the price once or twice. And yeah, maybe I'm going to recoup it over 2 or 3 years, but I'm going to recoup it. Man, what a great opportunity. And I get to sell the home today. What a great opportunity. And it's a win-win-win. The seller wins, the buyer wins, the agent wins. And matter of fact, even the loan guys win because we want to do the refinance when the rates drop. Marco, you're on
Sorry,
mute.
on mute there. So no, this is great information. We're gonna put up your contact information. If you can let people know, like, how do I get in contact with Ryan? How do I get in contact with more seller financing and bridge loans so that they can really ask some questions and ultimately move forward and get signed up with your program. I think it makes there seems to be a ton of upside when working with you guys.
Well, thank you, Marco. Yes, please feel free to reach out to. I've got quite a large sales team, so more than likely, you'll be doing demos with one of these folks that reach out. Be doing demos with our sales team. We are here to answer any questions. Just give us a ring. Reach out on the website. It's got lots of opportunities to engage, and we look forward to helping each and every one of the buyers and sellers in today's market.
Thank you so much. Thank you so much for joining this webinar. People out there, please contact Ryan. As you see, his email address is listed below. The website is listed below. Feel free to go onto the website and just do your research, get in touch with his company, and see how this solution can ultimately work for you. Obviously, with HomeRiver Group, if you have any property management questions, right? Of course, once you do purchase that house, that home from Ryan's or with Ryan's help, with more seller financing and bridge loans, obviously HomeRiver Group can manage that property for you to ensure that we do maximize your cash flow and continue to save you time and also money. So feel free to reach out. Our contact information is here as well. Please do follow us on social media. So on Instagram, HomeRiver Group, on Facebook, as well as on LinkedIn. And then also feel free to follow me on LinkedIn as Marco Walker. And then, of course, Ryan Leahy is on LinkedIn as well. Thank you so much for everyone who joined this particular webinar. And as always, effort equals results, results equal opportunity. Everyone have a wonderful, wonderful day.